Well, we've talked a lot about the immigration story in Canada. It is very much tied to the fact that the country's population is aging. In fact, over the next 3 decades, Stats Canada projects the number of Canadians 85 and older could triple. It also estimates 1 in 4 Canadians could be over the age of 65 as of next decade. Now, beyond health care, there are big questions about what that means for housing. Sienna Senior Living is at the forefront of that. The company operates retirement residences, long-term care homes across Canada. It also just reported quarterly results. Nitin Jain is the CEO of Sienna Senior Living, and he joins us here in studio. Good morning. Nice to see you.
Good morning, John. Good to be here.
I guess one of the ways that we can measure what's going on within your facilities is occupancy rates, and you guys just disclosed your latest quarterly results. What's happening with the business right now?
John, we have had a great third quarter, and fourth quarter of positive AFFO growth. And dividing our businesses into two, our long-term care business is stable, predictable. For the last 3 years, you couldn't say stable and predictable long-term care, but now that time is back. Expenses are coming back in line, and that homes are fully 90.5% occupied. And on retirement, we had 4 months of positive growth in occupancy. And this is on top of when we look at our North American peers out of the 5 or 6 public companies, we're on 500 basis points ahead of nearly all of them. And we are now growing that. Our lead indicators, which is obviously the first phone call you get or the first online someone reaches out to you, is up 30% year over year. So we are headed into great demographics. And you just mentioned next year, 1 in 5 Canadian is going to be a senior, and in 15 years, 1 in 4 Canadian is going to be a senior.
So when you get that phone call, 9 times out of 10, what's the context on that call? Why are you getting the call in the first place?
This is where our retirement work is so different. Our retirement work is needs-driven. It's 85 plus. So people are calling in because they have either a care need, they're living by themselves, they need that social interaction, they need someone to cook their food. And this is why our occupancy continues to do extremely well in Ontario, BC, Saskatchewan, and we just entered the province of Alberta now.
Yeah, I saw that you guys made that move. I do want to talk about it, but I guess sort of bigger picture, you talked about the last few years being in some ways a roller coaster for everyone because of the pandemic itself. What would you say were the biggest learnings from that? And given the fact that we constantly talk about housing in this country and housing affordability, but you guys are at a very distinct part of that story.
Right.
Do we have enough housing available for an aging population?
So there are 2 things going to be true about senior living. As I mentioned to you before, we would not have enough places for seniors to live, and we would not have enough team members to take care of seniors. And the learning for us was we realized as corporate Sienna, we don't serve residents, we serve our team members. And our team members serve our residents. So our focus has been on serving our team members. 3rd year in a row, our employee engagement is up. Meaningful work, which is the biggest metric they go after when we look at the survey, is 9.1 out of 10. And we get around 31,000 comments a year from our team members on what's going great and what we need to do better. So that's from a perspective of our team members.
But in terms of the housing issues right now, I mean, do you guys feel confident in the outlook enough to go out and build, or do the same issues that anybody who's trying to build in a higher interest rate environment has to deal with right now or grapple with?
I think that answer depends on what you did during the times when things were great, when you can borrow money and you can issue equity nonstop. We did not do that. We have a pristine balance sheet, and we continue to have a pristine balance sheet. We have $300 million under development, so we are building a lot more housing. From an equity perspective, we have a 9% yield for our shareholders, so we continue to be very attractive for shareholders at given time. And as I said, we are actually growing in this time. So this is a great market to grow because there are opportunities, and having a balance sheet like ours allows us to do that.
You talked about the staffing, and I noticed on your conference call the idea there's a lot of independent agencies that help to feed into different retirement facilities with staffing, but it sounds like you're shifting away from some of that, which is one of the ways you're able to control your costs, or were in the quarter.
100%. Pre-pandemic levels, or 2019, we are now back to that. And we went up 300% over the last 3 years. We're now back to 2019. And the amazing thing, when teams can achieve that, they're not stopping there. Their goal is to get to zero. And it's not, frankly, just about cost. When I go visit our sites, our team members are most worried about staffing agencies because they have to train these people. And our residents are most worried because they have a new person coming into their home every day because it's people's home.
Right.
And you want consistency and people that you care about on a daily basis versus someone new each and every day.
Okay, so you talked about the expansion, and you've got a market like Alberta. You've got this update in Calgary. I think Alberta and Saskatchewan have both been attractive markets to you. What's behind the expansion? What's the driving force there?
I think the idea is the same, that there is not going to be enough places for seniors to live. And operators and owners like us, who have been doing it for nearly 50 years, we think we can add a lot of value to the homes that we buy. So we entered the province of Saskatchewan last year. We have been looking into growing into Alberta, which we just did. And we're building in Ontario. We have a retirement home opening up shortly, and we have 2 long-term care homes under development, one being a campus of both long-term care and retirement.
And I guess at a time when we're dealing with so many big issues and the population is aging, what do you think are some of the big questions we have to talk about as a society, the things that you're seeing firsthand that you'd like to see the government thinking about in an environment like this?
I think the first one, there are 2 areas. One is how do we build faster?
Yeah.
And at a better price, because it has become prohibitive to build in many cities, especially bigger cities.
Even though you're saying you like to build, you want to build.
We are building, but we are building in smaller cities where development charges are low, it's easier to find labor. So those things are going well. And the second is around immigration, because there was a lot of focus on immigration, and you talked about that. But we're realizing you cannot just bring people here. You have to help them with housing. You have to help them get used to Canada, because it is different coming to this country. I came to North America 20 years back, and I had a lot of learning to do. And I think at that point, I could afford a house. Now those things are different. So as companies, we have to step in a bit more. So we're putting people into remote areas such as Muskoka, and we have to support them with getting housing to get started for a period of time before they can find their own.
Right.